Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to split today's episode into three sections. Okay, so first of all I want to talk about cycles. I want to share some insight into cycles. We are due a cycle low any day now for the S&P 500. We're also due a half cycle low for Bitcoin, and it's interesting, every time we get one of these show up, every time we get into one of these windows, a bunch of the same stuff happens over and over and over again. And if you are aware of that stuff, if you are aware of what the cycles are, what they serve to do, how they work, it gives us an enormous advantage over the market. So I'm going to talk about this. I'm also going to show you the implications of these cycles and how they pertain to the CPI print that we're expecting to get tomorrow. Then I want to talk about the big picture for Bitcoin, zoom out a little bit, because I keep seeing people say, oh, it's crashing, the top's in. Okay, fine, it's crashed 2% today. But let's look at the big picture. I'm going to spend some time on that because, again, if we're just objective observers, we should be able to see that things don't look so bad. And then, as always, we're going to move into the TA. I'm going to show you my live trades. The positions are always called out ahead of time. I've been calling new positions out ahead of time, and I'm looking to get into some this week after the CPI print comes out because of what the cycles tell us. Okay, so from the top, I'm going to start with cycles. Just in case anyone doesn't know about cycles, I'm going to spend a couple of minutes just touching on what they are, what they serve to do. For the S&P 500, it undergoes 40-day cycle lows, meaning approximately every 40 days, give or take a few days, what we see is a significant low form and then price trade out of there. Now, we just so happen to be right in that timing window where we're expecting to see another cycle low form any day now. And so the funny thing about cycles is, initially, you might not believe in them. It takes a while for you to build trust in them. But objectively speaking, they are observable. They are just a force of nature, a code in the universe, no different to any other law, such as if you jump off of a cliff, you will fall to the ground, or if you put something sharp in your hand, you will feel some pain. And I understand if you haven't seen these before or you're unfamiliar with them, it becomes difficult to trust in them, to believe in them. But the reality is, when you have seen as many of these as I have, when you have traded as many of these as I have, in fact, I have, as I'm sure you're well aware, built an entire trading system around these cycles. The more I see, the more I come to only believe in cycles, and the more I start to understand that the cycles are in control. And it doesn't matter what the narrative is, what's in the news, what people think, what the speculation is regarding any macro data or backdrop or any of that. The cycles are in control, and the market, us traders, investors, we will find any reason or excuse to explain away the price action that the cycles exhibit. So what does this mean? Given how late we are, we've had a cycle low in the S&P, given how late we are in this current daily cycle, we know that it is reasonable to expect a decline into another cycle low any day now before the resumption of a new cycle for the S&P 500. So here's where it gets really, really interesting. Tomorrow, we have got a CPI print coming out, which I suspect will be a major market catalyst. We can all sit around all day and guess and speculate as to whether that CPI print will come in below expectations, flat, or above expectations. But the funny thing about having this knowledge of cycles is it actually doesn't matter. Now, I should make this clear. It is my expectation that we are going to see continuation of disinflation. I, therefore, am hoping and expecting to see a lower print. But again, the funny thing about cycles is the print isn't going to matter tomorrow because of where we are in the cycle. The cycle says we're going to find a low and begin a new cycle, which means regardless of what the CPI print is tomorrow, the market is going to find a way to explain away whatever the print is in a bullish context. So if, for example, we get a cold CPI print, lower than expectations, okay, then the market will have a very easy job explaining that away. The market will come up with some narrative such as inflation is finally coming off, inflation was colder than expected, the Fed has finally tamed inflation, and we're probably going to see rate cuts. So that will be the bullish explanation, okay? Nice and simple if we get a cold print. Similarly, if we get a flat CPI print right in line with expectations, the cycles say the market will find a way to flip this into a bullish narrative. The market will find some explanation to say, for example, oh, CPI came in right around expectations. Well, at least it wasn't hot, right? Well, at least it's not spiking. whatever the narrative is, the market will find a way to explain the in line with expectations print, should that be what we get, away in a bullish context. And we know this because of where we are in the cycle. We are so late in the cycle that any dip here should result in a cycle low before continuation of a new, fresh daily cycle ahead. And here's where it gets even more interesting. If what we see tomorrow is a hot inflation print, okay, most people would assume that is bearish. Most people would say if inflation continues to stick, if it starts to even creep up and exceed expectations, then how could the market interpret that as anything other than bearish? But given where we are in the cycle, given how late we are in the cycle, given we know we're in that timing window now to expect to see a cycle low come in, even a hot CPI print tomorrow will have the market and investors find some way to explain this away bullishly. The price should trade into a cycle low, trade out in a new daily cycle, and the market will invent a narrative to explain this price action. The market will say something like, well, that means higher for longer. Well, that means there's going to be no rate cuts anytime soon. Well, that means there's still space left to front run the rate cuts that aren't showing up anytime before November, or whatever the thing is, right? But the point I'm trying to make here is having this context of the cycles means that we know a cycle low is coming. And again, I say, as I often do when we get to these cycle lows, it is not the narrative that is in charge. It is not the data that is in charge. It is the cycle that is in charge. If I now draw a slightly different example, okay, we make a cycle low here, something like this, and we trade up, and let's assume the next cycle low is not due for 3 weeks, okay? So instead of it being due any day now, like it currently is for the S&P 500, let's assume we had a good 3 weeks before the next low was due. And then we got our hot or flat or cold data. Well, in here, okay, data can actually be treated as data. If it's cold, the market can continue to rally higher before its next cycle low. If it was in line with expectations, then the market has options. It can either trade up and into that cycle low, or it could trade down into a lower cycle low. And if we were to get hot CPI data come out this early in a daily cycle, then bearish data could act as bearish data. What we could see is the market go, well, that's okay. Like, it's bearish, that makes sense. Inflation's sticky, higher for longer, more restrictive policy, more stress on the banks, whatever the narrative is. But as it turns out, as I was saying, we just so happen to be so late in this daily cycle that any dip here, okay, according to the cycles, is going to be explained away with a bullish narrative. So it doesn't matter what the CPI print is tomorrow. The cycles say we are going to find a cycle low and begin a new daily cycle. Now, let's be really clear about this. This is not me changing stance. I know people are going to start writing things like flip-flop finance or whatever else. No, I'm still calling for continuation of disinflation. I'm still open to seeing 1 or 2 more prints before I throw this idea out the window and say it's completely wrong. So I'm by no means setting myself up here to say I told you so. I'm making it very clear, I still expect continuation of disinflation, and if we don't get that over the next 1 to 2 prints, then I will throw this whole idea out the window. But what I am saying is, from a cycle perspective, we've had a cycle low, we've had a full daily cycle, and we're now in that window to see another swing. Because, as I said before, cycles are in control. The market finds a way to explain away the price action of the cycles using the news and the data. I'm saying it doesn't actually matter whether I'm right or wrong about CPI. It doesn't matter what the data actually shows. From a cycle perspective alone, we are expecting to find a daily cycle low and a continuation of a new daily cycle. So armed with this knowledge, the cycles are kind of hinting at favorable CPI data. But as I said, the data doesn't actually matter pertaining to this cycle low, because the market is going to do its job to find a way of explaining away this price action given where we are in the cycle. So hopping into a chart, you can see here, we are right in that window to see a decline into a cycle low. Any cycle low and swing that we do see here, anything akin to this, for me is a buying opportunity. For me is an area on the chart to manage the risk around. The stop would go below wherever that low forms, and the stop from the first position would be moved up to break even, or even up below the stop from this position. And thus, in the face of all of the fear, uncertainty, and doubt that's out there now, in the face of everyone calling for higher for longer with rates and sticky inflation, I am here to say that the cycles give us an advantage, just like they do in every other case. We do this every 40 sessions or so. We come back and we make another one of these videos, and I'm just pointing out here and saying, from a cycle perspective, the cycles are in our favor to have the market explain away whatever data comes out tomorrow as bullish. Now, of course, as I said, if it's cold, we've got an easy explanation. If it comes in hot or flat, the market will likely be very confused by the way the market rallies out of here anyway. And that is why I'm presenting what I'm presenting to you today, because armed with this cycle knowledge, we have an advantage over the market here by understanding that the cycles do not suggest further downside out of this CPI print and out of this week. As always in CPI, there will likely be chop, volatility, games played. We will likely get the up, down, up, or the down, up, down. But ultimately, any dip here followed by a swing is a high probability setup for me to get long out of. Needless to say, if you're a level 3 member, I'll be notifying you in real time, and we'll be looking to get the NASDAQ long on as well. Again, though, expect some kind of decline here, perhaps even hot data that comes out, and we see the market sell off and panic, only to find a swing and reverse and catch everyone offside. So again, I say, understand the context of the cycles, and you will get a massive advantage over the market. Something else I wanted to point out is not only is the stock market due its daily cycle low, but Bitcoin is right in that window to see a half cycle low. So amidst all this bearishness, amidst declines in Bitcoin and potentially the stock market over the next couple of days, we are in that neighborhood where getting short here, being bearish, panic selling would simply be going against what the cycles suggest. So armed with this knowledge, you can of course use this to have a massive advantage over the majority of market participants. Another key factor here for cycles is that the cycle lows serve to flush and reset the sentiment. So as we approach this cycle low timing window, which of course we are, okay, this cycle low has been marked here for a while, just like the next timing window, we know where that is, and the one after it, and a weekly cycle, right? We know all of this ahead of time because they are very consistent, but it's important to be an objective market observer. As we approach the end of a daily cycle and start to look for a daily cycle low to form again, we want to see sentiment reset. We want to see sentiment turn bearish. We want to see people start to get angry and frustrated at the market. And again, it's not about getting caught up in this. It's not about taking part in it necessarily. It's about being an objective market observer. Since we know a cycle low's come in, shouldn't we expect that to reset and flush the sentiment? And if that's the case, shouldn't we expect to see people start to get very bearish, very skittish, very nervous right into that timing window for the cycle low? And of course, right on schedule, that is what we're seeing. People calling for major tops, people getting skittish, people getting very, very bearish, but the cycle lows say we're about to find a swing and about to move to the upside. And I also wanted to point this out because this is probably the best example I've seen of cycles doing cycle low things. I know whenever I pull up something like this, a lot of people write in the comments things like, oh, we don't care about fights on Twitter or whatever, but it's wrong not to care. Okay, I'm not suggesting we need to get our feelings hurt or be upset about things like this, but again, it comes back to being an objective market observer. This is exactly the kind of thing we must take note of as traders and investors if we are going to be professional about things. You can see here that a very simple idea, such as we're not going to see rate cuts anytime soon, in fact, we might not see them till November, because according to this idea, it doesn't make sense for Biden to cut before elections. I would personally have a differing idea, and that idea is that Biden can't even read a teleprompter, let alone decide what the Fed funds rate should be. Now, needless to say, Biden doesn't really make the choice anyway. It's the central banks and the Treasury that decide what the federal funds rate is going to be. And you can see how quickly, right as we're at the timing window for a cycle low, we see people losing their mind. Okay, now what this is, again, let's be really clear. This is not me pointing at this and saying, oh, he said, she said. That's not what this is. This is me being a professional and objective market observer. This is a mind in wreckage. Okay, this is a market-induced schizophrenia. This is a man that has taken leave of his senses. And it is not about pointing at comments and saying, oh, look how toxic this is or anything like that. It is about being able to predict what the market is going to do ahead of time, i.e., look for a cycle low to form, and being armed with the knowledge that into that cycle low, we should start to see people lose their marbles. We should start to see people call for major tops. We should start to see people using the term crash on a 2 to 3% decline for Bitcoin. So again, are we expecting to see a pullback here? Yes. Why? Because it's right in the timing window for a cycle low. Are we expecting to see a shakeout into that CPI before, regardless of what the data is, the market finds a way to explain it away bullishly? Yes. And armed with this knowledge, can we use that to look for swings and potentially get into some long positions? I would make the argument, yes. This is what I do every other cycle low. It works just fine. Needless to say, then we play a couple of cycle lows and look to take some profit on a breakdown. But I hope you can see that using these cycles, being armed with this knowledge, being able to observe objectively and say, are things going according to plan, gives us a massive advantage over the market. So whilst there will probably be some very choppy and volatile price action, whilst there will certainly be some headlines, some narratives, some big accounts on both YouTube and Twitter and everywhere else calling for the end, the cycles do not support this, and thus knowing that the cycles do not support this gives us an advantage over the majority of market participants. And so just before we move on to the big picture for Bitcoin, okay, have a look at this, because we've got a letter from Senator Warren demanding that the Fed cuts interest rates. They are writing to Chair Powell to urge the Federal Reserve to cut the rates from its 2-decade high of 5.5%. They're saying the sustained period of high interest rates is already slowing the economy and is failing to address the remaining key drivers of inflation. Furthermore, the ECB, which like the Fed has a mandate to steer inflation towards a target of 2%, cut interest rates for the first time in 5 years. It's time for the Fed to do the same. They are also pointing out that since the ECB has cut rates, the US must do so. Otherwise, they might risk relative dollar strength and thus push the dollar higher, tightening financial conditions further. So note how the stage is set right into these cycle lows, okay? Regardless of inflation, because we've seen these other central banks cut, the stage is set for the Fed to come out and announce premature rate cuts. By premature, I mean ahead of what the majority of market participants are expecting. If they do this, the market will likely front run the onset of that cutting cycle. It will likely push up significantly higher ahead of those expected cuts, which typically mark the top within about 1 to 2 months of the onset of a cutting cycle coming in. And then we'll be able to look back in time and say, well, do you know what? That actually made a lot of sense given where we were in the cycles. All it will take is a colder or flat CPI print followed by a bit of dovishness and a hint that we're going to see rate cuts, and cycle lows will continue to do cycle low things. We'll have a very easy explanation to explain away the price action, and overall, this will just be the Camel Crew continuing to set the gold standard of YouTube trading. So it's an absolutely wild time to be alive. Now let's be clear. Just because I expect to see these early rate cuts, just because I expect to see inflation coming off, okay, doesn't mean I'm right. But it's not about being right or wrong. It's about staying on the right side of the market. It's also about staying open to all possible outcomes, okay? Whilst that is my base case expectation, I have said countless times I am open to being invalidated. I am open to seeing more gas left in this goose. I'm open to seeing the stock market and Bitcoin continue to run significantly past my expected timeframes. And all I am asking is, if you disagree with my ideas, that's fine, but at least be open to them as well. Just like I'm open to everything, I'm only asking you are open to everything as well. Now, if we are right, and we do indeed see the onset of this cutting cycle much sooner than most people expect, historically speaking, that tells us to expect the stock market to experience a major top within about 2 months of the start of the rate cutting cycle. And a lot of people don't want to hear this because that implies there's only a couple of months of bull market left. Okay, and everyone has been positioned and expecting Bitcoin to run well into next year, the end of next year. Even the early top callers are kind of calling for the end of this year or Q1 of next year. And something people are, at least in my comment section, getting increasingly frustrated with is the fact I keep saying we might have to entertain a top as early as July or August. A lot of people don't seem to like this idea. And again, as always, I'm open to being proven wrong by the market. But if we were to see these early rate cuts, okay, then it tells us based on historical data, that's exactly what's in play. Now, not only that, have a look at this chart here from Crypto.com. Notice how we get the exact top for the stock market in May 2011, and 134 weeks later, Bitcoin puts its exact top in. We get the same here. The stock market, the S&P, its exact top is in May 2015. And again, 134 weeks later, the exact top comes in for Bitcoin. We see the exact same thing here. September 2018, top here. 134 weeks later, the exact top for Bitcoin. And right now, we've had a top in the S&P just before the 2022 bear market. 134 weeks later, if this pattern is to repeat once more, gives us a top for Bitcoin in the week of July 29th. Make no mistake about it, I don't want this to be the case, okay? It would be so much easier if we get this for 18 months. Of course I would rather have that. Of course I would rather see Bitcoin do Bitcoin things. But there are more and more signs by the day pointing to the fact the Fed is going to cut interest rates, okay? Inflation might not be as sticky as people think. And frankly, I can't get away from this idea because it just won't invalidate itself. As I keep saying, I want this thing to invalidate, but it refuses to. So again, I'm not saying this will happen. I'm saying I'm open to all possible outcomes. But if indeed what we see is some kind of cycle low for the stock market and half cycle low for Bitcoin over the coming days, followed by a nice rip-roaring rally, okay, it will have all the familiar symptoms of an earlier than expected top, particularly if the Fed is going to cut interest rates. And all I have to say is just be open to everything. So moving into section 2, the big picture for Bitcoin. Apple just unveiled this whole tap to pay between iPhones. So it begs the question, doesn't it? When Bitcoin to Bitcoin payments via iPhone? When are they going to integrate Lightning or Bitcoin wallets into the iPhone? Probably coming in the not too distant future, right? We just saw MetaPlanet purchase additional Bitcoin worth 1.6 million, adding it to their corporate treasury. We've also seen the Canadian public company DeFi Technologies having adopted Bitcoin as its primary treasury reserve asset. Over in Paraguay, they're going to sell excess hydro energy to Bitcoin miners as part of its new economic development strategy. Underneath all of this, BlackRock is now holding around $21 billion worth of their spot Bitcoin ETF. The total global Bitcoin ETF holdings are now north of 70 billion in Bitcoin. That is 5% of the supply. And the current ETF fund flows put Bitcoin on track for an all-time high within just 60 days. Okay, there are $12 billion in Bitcoin shorts up to 74K. Again, we're right in that timing window to see a half cycle low. It would make sense, wouldn't it? It would make sense that we get a squeeze in the not too distant future. When we zoom out and look at the big picture, okay, does the hard right edge of this chart not look an awful lot like this before Bitcoin did Bitcoin things, and here when it broke its prior all-time high from back in 2017? Bitcoin is currently consolidating around the prior all-time highs. This is a bullish look, not a bearish look. Here's the same thing again, okay? How can you be bearish here when we've got upward sloping moving averages and again, consolidation for around 15 weeks above the prior all-time high level? Here's another look using a parabolic curve, okay? The 4 bases into the 5th. Have we not got 4 bases into the 5th, okay? This is the only missing component. Also notice how if we get a big squeeze like this, okay, that again speaks to this July-August timeframe, doesn't it, for the top? Again, it's not a prediction, it's just an observation. I think everyone needs to be open to this as an idea. Speaking of parabolic curves, okay, is this in play? Is this on the table? And I know a lot of people will immediately be shying away from this and saying this is not possible. It is not possible that we can squeeze from 70 odd K to over 200 in just a few weeks. I know people think this is impossible, but as Kushi points out here, okay, have a look at the comparison to gold. A near identical structure, okay, 3 into 4, right around the prior all-time high, just like we've got today, before gold underwent a monster 5th wave. A similar look for Bitcoin is certainly not off of the table. I know it's very bearish out there. I know a lot of people don't believe in this. But until such time as we see this thing roll over and break down, then I think the risk here is to the upside, not to the downside. I will also stop here to pause and ask, are you positioned for this? Do you think most people are positioned for this? On a balance of probabilities, okay, I think most people missed this move. In here, remember, at the bottom of Bitcoin, people were calling for 12, 14K. Then they were calling this just a little counter-trend bounce before a retest of the lows or 12 or 14K. They were calling this the biggest bull trap of all time. Then we got into some 702 retracement and we saw people online with massive amounts of followers publicly sell their Bitcoin at the retracement, calling for new lows again. Okay, the majority of the market is not positioned for this. The majority of the market, even now, has been offloading at the prior all-time high, expecting some kind of big correction before the resumption of Raoul Paul's up-only bull market into the end of next year. I think the way you harm the most amount of participants here is to get this all-time high break, okay, and force them into the top, somewhere in this neighborhood. Again, it's not a prediction or a call, it's an observation, but again, I suggest the longer we consolidate above all-time highs, the more base building we do here, then the less likely it is that we need to come back down here and spend any time revisiting it. The more upside price discovery there should be left on the table. And again, if you think this can't possibly happen, well, gold did it right here. Note for gold as well, we went from the lows of around 200 to just under 700 bucks. Okay, that's a big move. That's a big move. Again, it's not out of the question. That's all I'm saying. And again, I point out and say, if this is to happen, okay, and it only takes a matter of weeks, how many people are actually going to be able to deal with that? I really don't think many people can deal with that. I don't even think many people can listen to this without having an emotional response, without getting really upset with the fact I'm even suggesting this might be one out of many possibilities, let alone have those people that can't even look at this objectively without emotion think they have a chance at capturing this move and staying on the right side of the market. So again, it's not a prediction or a call, one day at a time as always. And finally, I wanted to show you this. Okay, this is the stock market. This again suggests that we just have a little bit of upside left into that final 5 before a big crash and a meltdown. It's another piece of technical data that nicely aligns with the fact we may well be closer to the end of this bull market than people realize, again, if catalyzed by rate cuts okay, then the writing is on the wall. And by the time we're down here, we'll be able to look back at this moment in time and say, well, yeah, actually, that was perfectly normal and to be expected. When they cut rates, major tops come in within a couple of months of those rate cuts, right at a time when the fifth waves were extending into the top of the channel, right at the time when we were due to put in a left translated weekly cycle, okay, something like this, cycle low, big squeeze, left translated weekly cycle, giving us, remember, 1 right translated, 2 right translated, 3 right translated weekly cycles, and the 4th one to left translate, all whilst the stock market is going parabolic. Again, I suggest to you that when we think about if this is to play out, will we be able to look back in hindsight and say that was really obvious? Yeah, I think we will. So as always, open to everything, understand where the cycles are. If you're a level 3 member, look out for the signals for when I enter some trades this week. And for everyone else, stay up to date, stay objective, stay open to all possible outcomes. Whether you agree or disagree with my analysis is completely irrelevant, okay? They're all just ideas. Nobody knows. We all get to have our own ideas, but I'm open to yours, and I hope you'll be open to mine too. Until next time, take care from me. I'll be back tomorrow with the CPI data, of course. Until next time, all the best. Cheers. Bye.
Camel Crew, come close. It's that time again. People losing their minds, calling for the world to end. Sudden trend line break, just to spook you out. If it gets to you, maybe go fishing for some trout.